Hello, and welcome to this episode of Argus Media's Fertilizer Matters. We're going to be talking about phosphates today, and particularly focusing on Australia. I'm Tom Hampson. I'm the phosphates editor for Argus, based in London. I'm joined by Susy Cornford, who reports on fertilizers from our office in Sydney. Hi, Susanna. Thanks for joining me. How are you?
I'm very good. How are you, Tom?
Excellent. Yeah, I'm doing all right. Thank you. So, could you give us a brief rundown of the basic fundamentals of the Australian phosphates market, please?
Yeah, sure. So Australia's fertilizer industry primarily caters to the broadacre markets, including wheat, canola, and barley, which have winter and summer crops. The most used fertilizer is urea, followed by MAP, which makes up about 19% of fertilizer imports. DAP and SSP account for about 2 and 4% of total imports, respectively. Australia imported 1.5 million tonnes of MAP and 127,000 tonnes of DAP in 2025. Most of this is from China, Saudi Arabia, and Morocco, with some MAP also coming from the US. As with most fertilizers, MAP and DAP imports are very seasonal and mostly come in from November to April, with small amounts for summer crop in between. And Australian farmers also use other products like UAN, AMSOL, and MOP.
Brilliant. Thanks very much for that. So, yeah, Australia is a slightly different one compared to many markets, because it will flit between being a net importer and a net exporter, depending on the seasonality, because it has Phosphate Hill, which is DAP, MAP production site, which is flexible between both. But there have been a few changes around Phosphate Hill. I wonder if you could just bring us up to speed with what's been going on there, please.
Yeah, of course. It's definitely an interesting topic. So Phosphate Hill was owned by Dyno Nobel, who sold it to Mayfair in March, but Dyno Nobel is still operating the facility. Incitec Pivot was previously part of Dyno Nobel. They are now owned by an agribusiness called Ridley, and Incitec Pivot still controls the exports from Phosphate Hill through the port of Townsville, and they are hoping to maintain that agreement with Mayfair in charge. There are a few factors challenging the facility, though. This includes sulfuric acid supply, the Mount Isa railway line, and the gas supply to the plant. Phosphate Hill is part of kind of a codependent industrial ecosystem, with Glencore's copper smelter and refinery supplying it with sulfuric acid. And these are kind of the ongoing key inputs and issues that are going to determine the ongoing success of the facility.
Yeah, absolutely. And then just before we go further on the fertilizer side, there are a few other phosphates projects which are ongoing in Australia. PRL's Ardmore site, Avenira, Ammaroo, Northwest Phosphate. How are they doing?
Yeah, so PRL Ardmore is the most mature, I guess you'd say. They have completed 2 shipments that we know of to New Zealand. Avenira is expecting first rock export by the end of this year. That was delayed from an original timeline of the end of last year. Ammaroo is not quite as far along, with construction expected to start in mid-2027. And finally, there's Northwest Phosphate's FOS1. Their operation is mostly constructed, and they just need to construct a slurry line to connect the mine to the port of Corumba for exports. They are expecting first phosphate export in the second quarter of 2027.
Brilliant. Thank you. So we mentioned earlier that Australia is also a significant importer of phosphates. How are the imports looking so far this year?
Yeah, so for January to April, MAP imports are down about 30% on the year. That's reflective of a few things, including late grower interest at the end of 2025, and of course, supply issues, starting with the war. DAP imports are actually up by 80% on the year. This is driven entirely by Western Australia suppliers. The state's imports for January to March jumped from 4,000 tonnes in 2025 to 57,000 tonnes this year. So I guess, Tom, Are you able to put this Australian experience into context? Like what's going on with the Iran war and how is it impacting the global market?
I'll give a quick rundown of what's been a real key thing, the big thing which has happened, which I think nobody has escaped, has been the US-Israel war with Iran. And the biggest change from that has been Iran closed the Strait of Hormuz. Saudi Arabian phosphate supply being cut off. Saudi Arabia would normally export from Ras Al Khair in the Mideast Gulf. Saudi Arabia accounted for about a fifth of the world's DAP. Saudi Arabia has shifted to exporting out of Yanbu and Neom in the Red Sea. So Saudi Arabian exports haven't fallen to zero, but logistically it's much more difficult to export from the Red Sea than from the Mideast Gulf from them. So their ability to export is restrained. Big importer of DAP in Saudi Arabia had accounted for about 40% of India's DAP imports last year as India kind of shifted away from China. Less supply was coming from China and they were having to focus on suppliers further to their west. After that, it started to become clear that one of the biggest impacts on the phosphates market was raw materials, sulfur and ammonia. The Mideast is a big supply to the world of both of those key raw materials for phosphates. Sulfur has proven to be the major driver, and about half of the world's sulfur supply was going through the Strait of Hormuz before it closed. So that gives a sign of how much of an impact it's had. In terms of kind of major suppliers to Australia and how the impact has been, so China producers have started to prioritize, or producers have been prioritizing the domestic market in China. So that means that cutting supply to export, DAP, MAP exports are stopped. They've also stopped exporting NPs, NPKs, TSP, SSP, merchant grade acid, industrial grade purified phosphoric acid. And it's uncertain when DAP, MAP exports will resume. Some people think that August they will see some out, but we're getting more and more people who are more pessimistic and think that perhaps we won't see new DAP, MAP offers from China until next year. Then if we look at also a big supplier to Australia is Morocco, and at the end of April, OCP in Morocco said that they were bringing forward maintenances which would have an impact of up to 30%. We now see that they may be running at more like 50% capacity, and with a reduction of stoppage of supply from Kazakhstan, of which Morocco was a big sulfur buyer, we have to see, but the impact again looks like it will hold output from Morocco down. If we look at again in terms of a sort of big major buyer, India has been hit as well. High raw material prices and low availability of ammonia and sulfur means that India is relying more and more on DAP imports at the moment. So that's kind of where Australia is sitting at the moment in the global market. We recently launched our weekly MAP 1050 FCA Geelong price assessment, and I wonder, Susanna, if you can outline to us, looking at that, have Australian domestic prices reflected the global trend? Because of all of this that I've said, phosphate prices have shot up globally.
Yeah, so Australian domestic prices have actually been quite sheltered from the conflict compared to definitely domestically. Our urea prices were hit quite bad, just thanks to a lack of domestic demand in the last few months. There hasn't been a very large amount of spot availability either for quite some time, but unlike urea, that hasn't been a massive problem. The market is now looking more at sulfur and sulfuric acid prices, and suppliers are thinking that this could cause a longer-term price firmness.
At the time of recording, the strait is still effectively closed. The war with Iran is still going. How are the Australians feeling about the next season ahead and at the end of 2026?
Yeah, I think there's quite a bit of stress. Multiple people have told us that the phosphate situation in Australia could be worse than the urea situation. Australia imports nearly all of its MAP and DAP from Saudi Arabia, Morocco, and China, as we've said. And currently, two of those three origins are out of the equation. And Australian importers are not very optimistic about Chinese product re entering the export market anytime soon. Suppliers will typically bring in smaller mixed vessels from China for summer crop demand, but as I say, that doesn't look like it will be an option. Australia is also so far away from most of these large producing countries, it just isn't economical to bring in a 10,000 tonne or even a 20,000 tonne vessel from Saudi Arabia or Morocco. So combined, Saudi Arabia and China contributed about 70% of Australia's MAP imports in the second half of the year in the past 2 years. So that kind of gives you an idea of how the picture is looking for the next 6 months and into the next season.
Yeah, interesting. And do you see the importers changing their habits from previous years to adjust to all these disruptions?
I think it's definitely too early to say, but it could be an option. The issue is that bringing APs in early would hold a lot of risk for importers, especially since domestic buying really doesn't start up again until December.
Well, the war and its effects are proving to be anything but predictable. So I think we'll need to do another of these to see how the Australian market gets on close to the season. It isn't a happy picture at the moment, but it is interesting nonetheless. We need to keep on top of it. So thank you for covering it so clearly, Susanna.
Yeah, of course. Thank you for having me.
And thank you to all the listeners. If you want to get in touch, if you have any ideas of things that you'd like us to cover, please do email fertilizer-m@argusmedia.com. That's M for Mike or MAP. I'm Tom Hampson. Thank you again for listening, and we'll see you again soon. Goodbye.